Nasdaq Europe has announced that it will expand derivatives clearing to include euro interest rate swaps, so-called IRS, in the coming months. This is the latest move by market participants in the European Union to move business out of London following Brexit. Even before Britain left the EU in 2020, London had angered Brussels with its dominance in IRS clearing. And these contracts are often used by companies to protect themselves against unfavorable developments in credit costs. Clearing is a crucial part of the financial market system. It ensures that a transition is completed even if one side goes bust. London's dominance in clearing has helped it remain a major global financial center by building a large pool of liquidity. And Britain is trying to make its financial sector more globally competitive after being largely cut off from the EU by Brexit. An EU law now being finalized will require banks in the EU to have an active account with EU-based clearinghouses for euro-denominated IRS transactions in order to reduce their dependence on the London Stock Exchange Group, the LSEG, and give EU regulators direct oversight of transactions linked to the Union. The EU's permission for banks in the Union to continue using London for derivatives clearing will expire in June 2025, increasing pressure to move the business across the channel. Nasdaq Clearing has started talking to customers about introducing euro clearing, and the Danish and Norwegian krone IRS wants to take on LSEG by offering multi-currency clearing, as Chief Executive Patrick Lohr said about this. From a technical perspective, we are ready, is what Lohr told Reuters. Nasdaq already clears IRS in Swedish krona, and the expansion to other currencies will allow customers to clear more positions within a single clearer and thereby saving on collateral. And this gives us more complete offering for Nordic customers, said Lohr. Nasdaq Europe, part of the US stock exchange Nasdaq and operator of 7 European stock exchanges in the Nordic and Baltic countries, claims to have a market share of almost 10% in the clearing of IRS in Swedish krona. LSEG, which did not comment on the Nasdaq plans, dominates the clearing of IRS trades in Nordic currencies, although these represent only a small portion of the total daily business, which amounted to $7.3 trillion on Monday, including $2.83 trillion in euros IRS. On the same day, LSEG processed 30.5 billion in Swedish krona IRS, 1.39 billion in Danish krone IRS, and 8.22 billion in Norwegian krone IRS. The German Stock Exchange in Frankfurt and the Madrid Stock Exchange of Switzerland's SIX Group are already vying to replace LSEG in clearing euro IRS traded between EU counterparties. However, Nasdaq targets euro IRS users in the Nordic countries and not the entire EU. Since Brexit, existing Nasdaq clearing members have already started moving some operations from London to Stockholm, and more members are expected to join them this year. That's at least what Lohr said. The EU is in the process of setting new rules for active accounts, although initially without hard minimum clearing volumes to give the market time to adapt. Lohr said policymakers will not be satisfied with just a small portion of business moving from London to clearing houses in the EU. I think this is the first step, is what Lohr says. Derivatives contracts in the EU are increasingly being settled or cleared via central counterparties, the CCPs. A large part of this clearing, especially for derivative contracts denominated in euros, that's the euro clearing then, is carried out by clearing houses in Great Britain outside the EU since Brexit. In a study by the Center for European Politics, the CEP, supported by the Deutsche Börse, that's the German stock exchange, considers efforts to move euro clearing to the EU. Brexit and its consequences have raised alarm bells in the EU and led to increased efforts to specifically bring clearing activities into the EU, says CEP financial expert Philipp Eckert, who conducted a study with the Berlin CEP expert Anastasia Kotowskaya. At the end of last year, the EU Parliament and Council each decided on their positions on the legislative proposals for euro clearing. An agreement should be reached between the member states and the European Parliament by the European election in June 2024. Measures to relocate euro clearing operations from the UK to the EU represent a serious interference with entrepreneurial freedom and could be perceived as protectionism, says Eckert. And therefore they demanded sufficient justification and an appropriate design. According to CEP scientists, such a justification is certainly given. Brexit revealed risks for the EU that should not be underestimated, for example, with regard to financial stability, dependence on third countries, avoiding liability risks for the EU, and monetary policy transmission. In addition, there is a lack of authority on the part of the EU supervisory authorities to effectively counter such risks. Therefore, increased efforts are needed to move euro clearing activities to the EU, including with regard to the EU strategic autonomy agenda, says Kotovskaya. To this end, while the EU should adopt a market-oriented approach, it should insist that EU market participants take effective and verifiable measures to relocate their business to the EU. Only then is there a real chance that resilient and competitive EU clearing markets will emerge in the medium term that can coexist with the global and British clearing markets, explains Eckert. The CEP study outlines a total of 10 dedicated guidelines for realignment of the existing EU legal framework, which should be taken into account for the upcoming trilogue. And I read this study and it's quite interesting. But there's at least some good news on the question of energy after Brexit. European countries are moving ever closer together when it comes to exchanging electricity. And even after Brexit, Great Britain is investing in electricity trading and in new electricity connections with the EU. The 765-kilometer-long Viking link between Great Britain and Denmark went into operation on December 29th in 2023, so just a few days ago. A direct electricity connection between Germany and Great Britain is already under construction, and further electricity connections with the Netherlands and Belgium are also being planned. With the increasing expansion of renewable energies and the transformation of the energy industry, cross-border electricity exchange is becoming more and more important now. A whole series of interconnectors are currently being planned or under construction across Europe. For Great Britain, however, the new electricity connection with the EU are vital for survival because of the island's location. And as I said, on December 29th, the world's longest land and underwater connection line with an output of 1,400 megawatts began operations. The £1.7 billion power line project, which began in 2019, is a joint venture between National Grid and Danish grid operator EnergyNet and has the capacity of transport enough electricity for up to 2.5 million UK homes. The construction of Viking Link is National Grid's sixth interconnector, as the company said. Initially, Viking Link will operate at a capacity of 800 megawatts before increasing capacity to 1.4 gigawatts over time. National Grid and EnergyNet will work together to bring the plant to full capacity in 2024. And Katie Jackson, president of National Grid Ventures, said, "This record-breaking new connection is a fantastic example of technology and collaboration with our partner EnergyNet. As we deploy more wind power to meet our climate and energy security goals, connections with our neighbors will play a critical role in increasing security of supply and reducing prices for consumers. It stretches further across land and sea than any of our existing connections, connecting the UK to clean, green Danish energy, improving security of supply and delivery huge carbon and cost savings to British consumers." The HVDC offshore cable was manufactured by Prysmian Group and laid on the seabed using a custom-built ship, the Leonardo da Vinci. Prysmian Group also manufactured the UK's onshore HVDC cable, laid by Balfour Beatty. The offshore section was manufactured and installed by Prysmian Group UK. The power cable for the Danish land section was manufactured by the Danish company NKT, and Monk was responsible for the installation. I don't mean the guy from TV. After the North Sea Link electricity connection, which has been in operation between Great Britain and Norway since 2021 with an output of 1.4 gigawatts, another interconnector will be built between Great Britain and Germany. The new German-British power line called NeuConnect also has an output of 1.4 gigawatts in both directions. Construction began on the 725-kilometer long NeuConnect Energy Highway in July. A high-voltage direct current transmission line will be built as a submarine and underground cable between the converter stations on the Isle of Grain in Kent in England and in the Wilhelmshaven region in Lower Saxony. NeuConnect is scheduled to be operational by 2028. And earlier in 2023, National Grid announced joint plans with the Dutch transmission system operator TenneT for a new 1.8 gigawatt interconnector between the UK and the Netherlands called Lion Link. This power line is intended to create its own connection to offshore wind power generation. Lion Link would then be the second link between the UK and the Netherlands and is expected to be operational in the early 2030s. A second new connection called Nautilus is also on the planning stages and offers the potential to connect with Belgium. And if you want to know more about Brexit or UK politics, the next video is right here in the end screen. I'll see you there. I'll be back.